$14 million. That's not just some random number, it's the price tag on a massive headache for Credit One Bank. A headache brought on by accusations of some seriously shady practices, a flood of customer complaints, and you guessed it, a huge class action lawsuit. We're talking about sneaky hidden fees, credit scores supposedly trashed, and non-stop unauthorized robocalls. For thousands of folks, this wasn't just banking. It was a full-blown battle. And that $14 million, that's the sound of consumers finally fighting back. Stick around as we unpack how Credit One Bank waded into this multi-million-dollar mess and what it all means for you. So who exactly is Credit One Bank? You've probably seen their ads in your mailbox or online, often aimed at people trying to build or rebuild their credit. They're based out of Las Vegas, Nevada, and they're a pretty big player in the U.S. credit card game. They've carved out a niche for themselves by offering credit to folks who might have a tough time getting a yes from other more traditional banks. Think credit cards for those with not so great credit scores, usually with lower credit limits to start. The bank often pitches itself as giving people a second chance, a way to get credit and show they can handle their finances responsibly, maybe even get higher credit limits down the road. But focusing on this part of the market, sometimes called subprime, also means their cards often come with different kinds of fees and terms than the cards you'd get with a top-tier credit score. While they were offering a path to credit for many, this is also where things got messy and led to all those customer grievances that eventually blew up into a legal firestorm. The very people they said they wanted to help, often those in tight financial spots, ended up being the ones saying the bank's practices systematically put them at a disadvantage. The lawsuit against Credit One wasn't just about one little thing. It was a whole mountain of alleged misdeeds that left customers feeling cornered and ripped off. Let's break down what they were accused of. First up, the fees. Oh boy, the fees. Customers talked about a constant stream of unfair and often hidden charges. Can you imagine checking your statement and finding fees you never signed up for? Or penalties that just seem to pop up out of nowhere, sometimes with no warning or clear reason? Some people said they were pushed into paying for things like express payments without being told there were cheaper or even free ways to do it. Think about it. You're trying to get your credit on track, maybe you're on a tight budget, and then bam, you're hit with extra costs that either chew up your available credit or dig you deeper into debt. It's a frustrating loop, and for many Credit One customers, it felt like the bank was doing it on purpose to squeeze more money out of them. Then there were the accusations about messed up credit and loan information reporting. Your credit score is a big deal, right? It affects whether you can get a loan, rent an apartment, sometimes even land a job. The lawsuit claimed Credit One was misreporting information to the credit bureaus. This could mean wrong or misleading stuff showing up on credit reports, potentially wrecking customers' credit scores even though it wasn't their fault. People even reported their credit card balances suddenly and mysteriously shooting up, adding to their money worries. And to make things worse, there was the customer service, or lack thereof. When customers tried to sort out these mystery charges or fix reporting errors, they said they basically hit a brick wall. Many reported getting automated replies, generic responses, or just no real help at all. Imagine trying to fix an error that's costing you money and tanking your credit, only to be met with a shrug or an endless loop of unhelpful robots. This feeling of being ignored and that the bank just didn't care was a common story in the thousands of complaints. It wasn't just about the cash. It was about feeling unheard and helpless against a giant financial company. On top of the fee fiascos and reporting nightmares, a huge part of the legal fight against Credit One Bank was about how they went overboard with robocalls. And we're not talking a couple of missed calls here. We mean a non-stop flood of automated calls that, according to the lawsuit, broke the Telephone Consumer Protection Act, or TCPA. What's the TCPA? It's a federal law that's supposed to protect us from annoying, unsolicited telemarketing calls, especially those using autodialers and pre-recorded messages to our cell phones, unless we've clearly said it's okay. Credit One Bank and its partners were accused of blasting out these automated calls for all sorts of reasons, like debt collection and pushing their services. What really got people fired up, the lawsuit said, was that these calls weren't just going to customers who might have been late on a payment. Nope. They were allegedly calling people who had zero connection to the bank. Imagine your phone blowing up with calls about a debt you don't even owe from some bank you've never heard of. Or even if you were a customer, getting these calls on your cell when you never agreed to be contacted that way. The lawsuit pointed to these robocalls happening between 2014 and 2019. Many people said the calls kept coming even after they flat out told Credit One or its buddies to stop. There was this one really stark case even before this big class action that shows the company's history with robocall issues. A woman reportedly won $232,500 because Credit One robocalled her 465 times over 6 months about a pretty small debt. The court in that case decided on $500 for every single unauthorized call. The sheer number of these calls was a massive issue. Some folks said they were getting called multiple times a day. People described this constant stream of unwanted calls as annoying, abusive, and downright harassing. In some previous TCPA lawsuits, Credit One had apparently argued that customers had to specifically say the word stop to make the calls cease. That argument got a lot of heat because it puts all the work on the consumer to stop calls that were allegedly unauthorized in the first place. This whole business of widespread, supposedly non-consensual robocalls was a key piece of the shady practices puzzle that led to that $14 million settlement. You know how a small leak can turn into a flood? Well, for Credit One Bank, that flood looked like over 1,400 formal complaints pouring in from frustrated customers just between 2022 and 2025. These complaints were specifically about things like those mystery fees and terrible customer service. These weren't just a few unhappy campers. They painted a picture of ongoing, system-wide problems, according to plenty of reports on the lawsuit. Customers laid out a whole list of troubles, charges showing up on their statements out of the blue, credit card balances suddenly and scarily jumping up, and then getting absolutely nowhere when they tried to fix these things. When they reached out for help, they often got robotic, unhelpful replies instead of the actual human assistance they needed. This steady flow of complaints showed a huge gap between the bank and its customers, feeding the anger and desperation that finally boiled over into major legal action. These weren't just statistics. Every single one of those complaints was a real person or family wrestling with financial stress, made even worse by what their credit card company was doing. People said they felt ignored, ripped off, and stuck with a financial institution that just didn't seem to care about their problems. The sheer number of these formal complaints, 1,400 in just 3 years about these specific issues, was a clear sign that things had hit a breaking point. It showed that the problems weren't just random mistakes, but widespread practices hitting a lot of Credit One's customers. This massive outcry was the undeniable spark that lit the fuse for the class action lawsuit, dragging the bank's alleged bad behavior into the spotlight of the legal system. With complaints piling up and people absolutely fed up, it was time for the lawyers to step in. A major class action lawsuit was launched against Credit One Bank, gathering together all the different grievances from its customers. The lawsuit officially accused the bank of widespread unfair and deceptive stuff. The main allegations were pretty damning, hitting people with those unjustified hidden fees we mentioned, messing up credit and loan information, which can wreck credit scores, imposing rate hikes without permission, offering consistently awful customer service that didn't solve anything, and, a big one, making all those unauthorized robocalls, which is a direct violation of the Telephone Consumer Protection Act, TCPA. The legal fight focused on the robocall mess happening between 2014 and 2019, and the more recent unfair practices like hidden fees and bad service from 2022 to 2025, which was when those 1,400 plus formal complaints came flooding in. Facing these pretty serious accusations and the chance of a long, possibly even more expensive trial, Credit One Bank decided to settle. Now it's pretty common in these kinds of settlements that companies don't actually admit they did anything wrong, and Credit One was no different. But even without admitting fault, the bank agreed to a hefty payout, a $14 million settlement fund. This money was set aside to compensate the thousands of consumers who had allegedly suffered because of what the bank was doing. Even without an admission of guilt, this settlement was a big moment of reckoning for the bank. So what's the deal with that $14 million settlement fund? Well, it's meant to give some financial relief to the thousands of Credit One customers who were affected by the bank's alleged practices. If you were one of those people who got hit with hidden fees, had to fight inaccuracies on your credit report, or got harassed by endless robocalls, this settlement offers a shot at getting some compensation. People who are eligible, meaning they can show they lost money or were hit with those unauthorized robocalls during the specific time frames, might get a payout. Some sources are saying that individual payments could be up to $1,000, but the exact amount each person gets will depend on a few things, like how many people file valid claims and how much harm each person can prove they suffered. There are also some reports suggesting that after legal and admin fees are taken out, the actual amount of money going to consumers from the $14 million might be closer to $8 or $9 million. To be eligible, customers usually need to have had an active Credit One bank account during the key periods, typically 2014 to 2019 for the TCPA robocall claims, and for the unfair practices claims, it generally covers the time customers were harmed and filed complaints, like 2022 to 2025. They also need to be able to show proof of the financial harm they went through, like records of unexplained fees, penalties, evidence of wrong credit reporting, or proof they got those unsolicited calls. And this applies to both personal and business account holders who fit the bill. For a lot of folks, this isn't just about getting some cash back. While the money is definitely important, the settlement is also a kind of validation for everything they went through. It sends a message that their complaints were actually heard and that these kinds of practices don't just get swept under the rug. The process usually involves a claims administrator, and people who might be eligible are often contacted directly or can find info on a special settlement website once it's all officially approved by the court. Even though Credit One Bank didn't admit to any wrongdoing with that $14 million settlement, you can bet the lawsuit and the outcome have definitely left a mark on the bank's reputation. In the financial world, trust is everything. When you have allegations of shady dealings and a multi-million-dollar settlement like this, it's bound to cause some serious damage. This whole Credit One Bank drama isn't just some random story. It's a pretty big wake-up call for the entire banking industry and a really important lesson for all of us as consumers. This $14 million settlement shows that people are getting less and less tolerant of unfair and sneaky practices in the financial world. For other banks and financial companies, this case is a serious warning shot. It shows just how big the legal and reputational risks are if they choose profits over treating customers ethically and following the rules. Things like hiding fees in the tiny print, making credit reporting mistakes and not fixing them quickly, providing truly awful customer service, or ignoring consumer protection laws like the TCPA, well, it's clear those can lead to massive fines and a trashed public image. Regulators and consumer groups are watching more closely than ever, and class action lawsuits are a powerful way to make these institutions answer for their actions. The message is crystal clear: being transparent, fair, and respecting consumer rights, not optional. And for us, the consumers, this whole thing is basically a call to arms. It shows how powerful our voices can be when we speak up together, and why it's so important to stay alert. Don't just assume a weird fee is your fault. Question charges you don't understand. Really look at your bank statements and credit reports regularly. If something feels off, say something first to the bank, and if they don't fix it, then to groups like the Consumer Financial Protection Bureau, CFPB, or your state's Attorney General. The Credit One settlement proves that even big financial companies can be held accountable. Get to know your rights under laws like the Telephone Consumer Protection Act, which limits those annoying robocalls, and the Fair Credit Reporting Act, which makes sure the info in your credit files is accurate and fair. Keep records of everything. Save emails, jot down dates and times of calls, and hang on to copies of statements if you're having problems. Yeah, the legal system can look pretty intimidating, but cases like this one show that being persistent and acting together can actually bring about real change and get people the compensation they deserve. So, what do you think about all this? Have you ever had any experiences with Credit One Bank or maybe similar run-ins with other financial institutions? We'd love to hear your stories and what you think down in the comments. Your experience might just help someone else out. And hey, if you found this breakdown useful and want to keep up with consumer rights and financial accountability, do us a solid, like this video and subscribe to the channel for more investigations like this one. Don't forget to hit that notification bell so you won't miss what we dig into next. The Credit One Bank $14 million settlement is way more than just a catchy headline. It's a really important moment in the ongoing story of protecting consumers in the financial world. It shines a bright light on the real-life impact of alleged shady tactics like hidden fees, inaccurate credit reporting, and those relentless robocalls, tactics that affected thousands of people, many of whom were already in pretty tight financial spots. While Credit One didn't admit they did anything wrong, the settlement does mean some money back for affected customers and definitely serves as an expensive lesson for the bank. Looking at the bigger picture, it's a loud and clear signal to the whole banking industry about just how vital transparency, ethical behavior, and strictly following consumer protection laws really are. And for us consumers, it's another reminder that our voices matter, especially when we use them together, and that staying vigilant with our finances and holding these big institutions accountable is key. This particular case might be wrapping up, but the fight for fair and transparent banking, that's far from over.